Good afternoon, traders. It's Mark here from Daytrading Room, and time is 20 past 3 in the afternoon London time. Thought I'd get a quick video out there. I'm actually long on the Dow at the moment. I bought. If I can just, I won't use a screen pen because it will stop the chart. My second target for this is 70, which is the just below the open. I just missed the fill there. But anyway, what happened is I bought this low here. The reason I bought this low here, and I got quite a good fill on that, a couple of ticks off the low. The reason I bought that low is because we've got a spike lower. The ticks weren't even that low. They weren't even that low. We pushed up, and it looked really nice. I got first scale off, fantastic, and we rolled over, and I had a stop just under that low, which just pinged me out. So it was a good trade. Profitable trade, but now this is why we use scaling and why I approach the market in the way I do. When I saw that ping me out just under there, literally I pulled it a bit tight. It was a little bit tight, but because I had a good move in my direction, I was looking for that 70 as a final target. Didn't get it, rolled over pretty quickly. I was quite happy to be out, so I took a stop there. But what happened is, as we pushed under, could just see there was just nothing to the move. There's nothing to the move. It just stopped dead. It just stopped dead. I got myself in there at 31. No fill. I moved it up to 33. No fill. When that's happening, you know what's going on. You know that you're missing out on it, and you know that if you can't even get a fill on a small retail trade like that, you know that others out there with bigger size are of the same boat. So anyway, long story short, I ended up paying up to 37. So got a fill at 37 on that, and this was after I've been stopped out. But really seeing the evidence that it was a fake out, and seeing the evidence that it was, it was still a genuine buy, then there's no harm in going back in again. I wouldn't take it a third in a row. That just violates my rules of the same trade. But the fact that you see that wick, you say, okay, I made a little bit on that trade, but I still think the premise for my final target of 70 at the open, and then ultimately I think maybe perhaps we'll push above the high. That's my very, very final target, just for a handful. But the main target is going to be this 70 here. And just if I get a fill on this, yeah, we've got a full fill there on 70, so that's good. Pleased with that. And I've got to literally looking for just new highs on a few, but that's all. But anyway, back to the point. The point is I've been stopped out on that, but seeing that the trade premise is there, and actually if I taking myself out of the trade and saying, hey, if I wasn't in that trade, would I want to go long there? The answer is yes, I would. Why would I want to do that? Because the ticks aren't extreme. We've pushed below that low. We've found some buyers. Everything looks great. Everything looks okay. There's no reason I would like to buy that. That's the sort of setup I'd like to take, especially when I can hear Ben. He might be able to hear in the background. I hope he's not too loud, drowning me out. But when I hear Ben saying, the locals are pushing, they're trying to find sellers, they don't find sellers. Then you can perhaps say, okay, well, listen, 60 minutes in an uptrend, we've been chugging up here on the markets. Yes, we had the odd gap down now and then, but the general, if you just brought up a 60-minute chart and just eyeballed it, you'd say the trend is up, wouldn't you? So, that's the general wind behind it, which you've always got to bear in mind. You always got to bear that in mind. So, this is pushing quite nicely now. I see we get a break of the high. Break 80 was the high. I'm just going to leave this chugging. I think I might take a couple more off at 83, but I quite like the strength of this, and the ticks have got plenty of room to breathe. I think I'll leave it. I've got lots of cushion there. Actually, I'm going to stick a little offer in there. Sorry, I'm doing this while I'm on the video, and sorry I can't see my screen. I've just thrown this up on a side screen here. I just want to make sure that making these videos is not detrimental to my personal trading. Just stick myself in there at 83. Oops, no fill. It's just traded at 83. It's done 19 lots. I was a bit late to go in on that, and it's just poked above that high. That could be. I might just have to drag the couple though. I've only got a couple here, guys. I'm literally just running a handful. I'm going to move it down to 81 here. Should just get that 81. Let's just see. That serves me right for being slow. 83 was the target. If I might have just got it if I'd have got it in a bit early. 19 lots. Yeah, probably would have got it. Hey, I've missed that. Never mind. Okay, I'll leave that there anyway, 81, just see if I can get a handful, and let's say the final target, I'll just manage it and see if we can get some high tick readers. So only the point is, reassessing the situation, reassessing the trade, happy with the trade, take the trade. The risk is great. It's all about making good risk reward trades, and the fact that we pull back up on that wick there, you can obviously put your stop underneath that wick. Why? Obviously, because if it's excuse me, a flush lower with no real sellers, then it shouldn't revisit. And that was sort of the premise that I had on the first trade, and it did revisit and stop me out fine. That's the way the market works. Second time, it looked good holding it. Happy to take that trade. So that's a good little setup and something to watch out for. But I wanted also to mention, moving on to adding with this additional strategies that are discussed on Sunday, scanning for explosive moves, the first pullback. That's my favourite Dow trade. Always, has been. I like it. I've talked about it loads. In August, it was very, very profitable. When I say August, I mean that volatility period we had when he had the explosive moves, the little pauses, pullbacks, and then get another 50-point move. Fantastic. So they're my favourite sort of trades. So as I talked about on Sunday, starting to scan for those opportunities in other markets. Now, if I bring up, I just want to point out a couple that came up yesterday. Google. Google is really strong off the open. I ignore the ticks, by the way. I'm just bringing it up on this chart. Google really, really strong off the open. There's your first pullback. Look how far it went before we got a red candle. A long, long way. Get that red candle plus psychological 600 level. Just works that. Held above it several minutes, tried to probe below it. Maybe you would expect it a little probe below it, but the fact that it didn't shows you the strength of the stock. And then we just took off from there. So that's the sort of thing I'm looking for. That sort of strength, that sort of um, drive, pause, blow off. The other trade that flagged up for me was Euro, and I think it was about 4 o'clock. There you go, that's the one. As again, forget about the ticks. This is just a chart thrown up on the side. Um, there's the euro. Look, four green candles, holding, 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 holding. It's not just one spike. You can't just dive in on one spike because that's when you'll end up buying at the top and you'll end up getting caught. You want to see if it's upwards, but it is upwards. We're talking an example upwards, obviously vice versa for down moves. If it's pushing up and you get a spike, you want to see at least 2 or 3 or 4 candles because it's holding. Then it's continued. It's not just a fat finger. It's not just a spike. It's not that. It is genuine strength buyers who are more aggressive than the sellers. They are hitting those offers and the market's being pushed up, and that's stopping the market from coming lower. So that's the nice little trade again, the little pullback. And yeah, the break wasn't as vicious as perhaps some of the other ones, but it's a nice high probability trade when you start to see that tape roll. And by the way, for euro, use the euro futures, which is at EC on TradeStation, so you can get that tape. The depth of market, the time and sales, and the volume coming through that. The blast up, and then for those of you who like to have a little trailer, that actually worked quite nicely. So that's the sort of thing I'm looking for. That's the sort of thing that adding to the trading setups, if you like. Dow's still number one, always will be. When there's action there, that takes my full focus. But if there's other bits and pieces pop up and I like those sort of setups, then I will take them. And actually, the Dow now, just bring it back up for you. Just I just rolled over. I think this still looks okay. I'm still happy to hold the meet the position. I'm in from 37, so and I've got my 70 target. 70 was the target. Took the first risk off and took the majority off of 70. Just got literally just a few left. Tried to get off 83, was just too slow on that. Shame. So we'll see. Might test the VWAP here. If it tests the VWAP and holds and wicks, then I'm happy with it. I'm still happy with it. To be honest with you, I still think this is going to push higher. Um, in fact, we could even. I'm just looking at the Dow chart here. Yeah, we could take out the high quite easily today, but we'll see what happens. While the trade is working for you, there's no need to cut it. It's something that you've seen me talk about if you've watched my videos last year about trying to run position, take risk off and trying to run. It's something that took me a long time to get, to get better at personally. But no reason to cut it, especially for taking the meat off and if you're trading with multiple contracts, you're able to do that. If you're trading with one, there isn't really a solution. You've got to perhaps note down if you were trading with multiples what your targets would be. So anyway, guys, a little quick video on that. I hope that's of some use, and keep the risk managed. That's the main thing. We're just looking for high probability, good risk reward trades. That's the name of the game. Um, and you know, just taking those and keeping the position size managed and the risk managed. Okay, take care, guys. Back with another video soon. Bye bye. Hey traders, Mark here from Daytrading Room. Yeah, just missed that 81. But you know what? I think we've got a nice bit of strength here. So what I'm going to do, little scalp. I'm still long. I've still got some sitting there at 81, and I'm looking for new highs for a little bit more. But I think there's room for a little scalp here. I'm just looking at the tape. Tape looks okay. Just put a little wick in there. I'm just going to have a little look around and see if we can grab a sort of 10 tick scalp on this. I'll just load it up with the 4 lot, and we'll just see. Yeah, it looks okay here. Wouldn't mind it. Just see what it dips back up. Don't want to pay up because there's not much in it. Just see if it will just rock back to 74. It is a key level. It is a key level. The ES is not that strong. We're right literally at the prior day's close here, so I'm a little bit cautious, but it does look nice and strong. Ticks are okay. I don't want to chase them here. I really don't want to chase them. I like it. I don't want to chase it. I like it. I don't want to chase it. 73 would be much better. You know, I'm not paying the 77s. I think it will go now without me by the look of it. But you know, it's all about risk reward. Yeah, it's gone. I've got my 81 fill anyway. Yeah, but it's all about risk reward, guys. You know, that was okay. The tape was strong. It looked great. It looked like it was going to break through. But I'm not going to pay. I'm not going to pay 77 for it. I'm not going to chase it, because if it rocked back to say, let's say 72, then what do you know, how do you trade it? You go, because I still wanted it at 72. That was the sort of price I wanted at 73, 72. It rocked back. If it had a rock back and I paid up 77, what you know, how do you trade that? You don't want to come out there. It's a short scalp. You don't want to be leaving it too long. You're caught. You can't win. You can't win by chasing the market. You know, you don't chase it. Let the market come to you. It didn't come back there. We went up to 77. I'm not going to pay up to that. Wanted it to come back to the 73, because just those few ticks, because it's going to be a quick scalp. It was going to be, I would have taken it off into that new high, bang, all off. That's the point. That was the premise of the tape, the scalp, the premise of this little trade that I was trying to capture. We didn't. That was the idea of it. So you have to let the market come to you regardless of what sort of trades you're doing. And the point is, paying up to 77 leaves you vulnerable in that example, because you pay up to 77, it comes back to 72, 73. You still want it. You still want it there. So you sit there with that 4 ticks. How much more do you give it? Another up to 10 ticks. But then if you're giving it up to 10 ticks and you're only looking for between 8 and 10 on the little scalp, it becomes a pointless trade. It becomes a pointless trade. The idea is you're waiting for that little pullback at 77. It'll come back to 73, 72, something like that. Grabbed it. I would have monitored it and see if it would go to 70, 69. Maybe closed it there. Literally, because I'm after that push. I saw the drive. We saw it. We saw it together. It pushed up, held. Look at that little retracement. We didn't get the little retracement. Not enough. And now it's pushed on. It gave us the premise of the trade. Fine. We walk away. We look for the next trade. That's how that's the way to trade, guys. The way to trade is to let the price come to what you want. Don't chase the price, because if you chase the price, yes, in this instance, you'd have got away with it. You'd have got away with it. You'd have paid 77. You'd have had it pushed to high. You'd have taken a 9 tick, 8 tick profit. Fine, but all you're doing is reinforcing bad behavior. I'd rather miss that trade. I'd rather miss it and not take it and miss out on the trade completely and stick to my rules, than I would take the trade and go, oh yeah, you know, I made 8 ticks, great. Who needs rules? Because it just reinforces bad behavior. But anyway, just thought I'd get that in there. I was hoping to try and capture that because it just looked great. Just didn't quite capture it. As I say, we didn't quite get it. But yeah, we'll see what happens. I think we're just going to hopefully just push on. I've got the I got my 81s finally from earlier, which I didn't get. You saw me do those, and we'll see. Maybe we'll get some new highs. The ticks look a little bit better now, don't they? They're holding quite nicely. Let's have a look. Oops, I moved the zero line there. They're holding quite nicely. We just don't seem to be getting below minus 200. So maybe it's just a chug up from here. But we'll see. We're heading into the 4 o'clock time period, which is almost 11 o'clock New York and noon. So yeah, we'll see what happens. Okay, guys. Shame we didn't get a capture there, but it's good to see. Good to see when not to take the trade, I think. So take care, guys. Speak to you soon. Bye bye.